Year ago, you launched a free PSD2 data application programming interface to make open banking more accessible to the developers, fintechs, and businesses in Europe. And I want you, Rolands, to tell us more about Nordigen and its mission.
Absolutely. Absolutely. So we started Nordigen a few years ago. We're based in a small city, Riga. There's not a lot of people there. And that also means there's not too many distractions. So it's a great environment to build a company. When we set out to build Nordigen, our initial mission was to build a better alternative to credit bureaus. And we wanted to leverage open banking, and open banking, something like 5-6 years ago, it wasn't really popular. You would call it something else, but the crux of the idea was that you can use banking data to understand someone's creditworthiness in a much better way than you would do using traditional credit bureau data. And so we set out to do that, and we became literally users of the first generation open banking solutions ourselves. What we specialized in was building the analytical tools on top of raw data streams coming from banks. Literally, those are transactions, and then we set out to build like an analytics company that a lender can plug into, and they would have a better understanding of someone's creditworthiness. Now, a problem that we ourselves noticed was that open banking was incredibly expensive, and the first generation open banking companies were charging us a lot of money. And frankly, they were charging so much that we thought that it's not fair. It was almost dishonest in a way. And last year, we did the calculations and we realized that, well, we could build an alternative to those services ourselves. So we can get the license that you need to plug into open banking APIs and build out connectivity. And even if we gave it away for free to like literally anyone in Europe that wants access to it, we would even save money then, as opposed to using the incumbents of the first generation open banking companies. And so that's what we decided to do. And we spent the last year building the connectivity a bit and building what we come to understand now is going to be the next generation open banking company. So if the first generation was all about building connectivity where there was no connectivity and selling access to this connectivity across Europe, then the open banking version 2 is all about leveraging bank APIs that are secure and built by banks under regulated standards, and certain regulation applies here, and it's free. And this is very exciting because it had completely changes the dynamics. And Nordigen currently is the only second generation open banking company, if you will, in Europe, offering completely free access to banking connectivity across Europe. But we're hopefully not going to be the last. And this is definitely a trend that has started, and a lot of people we've heard that are, if they now understand that connectivity is an absolute commodity. And there's only one price point that makes sense, which is zero. And that means that any business model that is built on top of the second generation open banking APIs has to be different than they're just selling access to bank connections.
And it's a great story of your product development, actually. So you launched the free app 1 year ago, and I will say that it was quite risky because, as I know, since the market always pays for the services that any company provides, any alternative or any product that is free, it raises the question of its quality and trustworthy.
Yeah.
Tell us about
this is
freemium strategy, because it's really interesting.
Yeah, so it is like that. When you hear that something is free, then you immediately associate it with lower quality. But then you look at things like blockchain. Blockchain in itself is something that is built on top of this absolutely inclusive platform, and the barriers to build a company on top of blockchain today are really, really small. Open source is another sort of movement where free does not mean that it's bad. it is just a different model. It is a model in which people are contributing to the same source code, and people can use this freely to build applications on top. And the second generation open banking company that we're building today is literally built on top of the same foundations that are existent in the blockchain world or the open source world. What is critical is to understand that in Europe, the Payment Services Directive, the regulation that is enforced all the banks to open up their APIs, it's enforcing the banks to build great quality APIs at zero cost. As in, like, for the end users who use the APIs and for the fintechs who would connect to those APIs, they don't have to pay anything to the banks. So not only is the API free, and has always been free since the launch of the regulation, but also the quality is as good as the regulator has enforced. And frankly, the APIs that you kind of look, all around the regulated APIs, they're amazing. They're like actually cutting edge. And so what we did was, we just got a license, plugged into those APIs, and we've built a pipe that just passes through the data, and that's it. And so there's nothing, unless we kind of do something incredibly weird with the pipes, there's no quality issue whatsoever. It's the same connections that we have made to the banks. It's the ones that our developers can connect to. So yeah, this is something that we were struggling with ourselves as well at first. We were, thinking like, should it be the lowest, fee? Maybe we should cost 0.000 something for the connectivity. And then we realized, like, no, it's not supposed to be that way. The next generation company is built with a business model that is completely drastically different to the existing one, even at the expense that people might find it weird. But that's, that's not bad. It is just different.
And as an entrepreneur who is so deep in this topic, what opportunities do open banking platforms open for the fintech startups and for the industry in general?
Yeah, absolutely. So what open banking does is it enables free movement of banking data and the ability to use bank accounts to make payments. And so those are the two things that the Payment Services Directive has regulated in Europe. In reality, what this means is that if you're building a fintech app, now you have to, beforehand, it was very hard to get access to transaction data of someone, your users, if they have a bank account elsewhere. And today, if you're building a fintech app, you know that there's an option that your users will be able to connect their HSBC accounts and their Barclays account and their Deutsche Bank account and Santander accounts in your app, free of charge. And do it through secure connections. And this is completely game changing. So any fintech that was started in the past, they have had to go through these struggles of how do they onboard customers, how they ensure that the customer data that they get that's coming from other third-party places is acquired securely and is accurate. And now you no longer have to think about these things so much. Well, there's an API for that, and so that completely changes the dynamic. And one thing that is interesting is also, US is probably somewhat ahead of Europe in terms of open banking adoption. And there was recently a report done by MasterCard where they claimed that something like 80% of the US adult population have used an open banking solution as part of their fintech app routine. 80% of all of the US adults. That is insane. And it just goes to show that, how powerful open banking can be. And then like that goes hand in hand with how fast the fintechs have been growing and how fast they've been challenging the incumbents. So the biggest opportunity, I guess, is that, if you're starting a fintech startup today, it's significantly cheaper to do it than it was 10 years ago, even 5 years ago. And that, I think, is what we all want. We all want more fintech startups. We all want more competition in the markets. We all want new exciting services, and all now all of that is possible and more.
And that's awesome because open banking really takes and has all the potential to reshape the competitive industry and landscape, and like also the consumer experience too. And Could you please lead us a bit through the influence that open banking exactly has on banks, providers, and customers itself?
Absolutely. Yeah, like you mentioned, there's three parties that are kind of stakeholders in this open banking space. There's the banks who have been asked to create these APIs. There's fintechs or the developers who are building on top of these APIs, and then there's the end users who have accounts in banks, and now they can do all sorts of magical stuff with their bank accounts. Well, banks, which are the first party that was affected, and they kind of knew this was coming because they saw the regulation taking shape and they had some time to prepare. Well, banks have been naturally not entirely excited to go ahead with this regulation. What this regulation has allowed banks to do is to have control over who's connecting to bank accounts. Now, before PSD2 was live, we had companies in Europe that were using screen scraping, like literally asking end users to give the access to their bank accounts and scraping the contents of the bank accounts, and the banks never knew whose account is being scraped or who is just like logging into their account 17 times per day. So those kind of things were hard to distinguish, and that had lots of exposure to all sorts of unnecessary risks. And now with PSD2, we see that the alternative connectivity methods such as screen scraping and reverse engineering are dying out, thankfully. And now banks have more control, but then that comes at a huge cost, of course, because the banks have to build APIs that are compliant with standards. They have to make sure that they are good. Otherwise, they are not compliant with the law. So it's pretty expensive, as you can imagine. And banks are probably, their tech stack is not like, not like a fintech tech stack. So they have to figure out how to make these APIs work with their legacy systems, and that's pretty challenging. Well, for fintechs, this is a complete game changer. If you were a fintech that needed banking connectivity anytime before PSD2, it was expensive. Only like really rich fintechs could afford this kind of stuff, and that's why many fintechs actually built their own tech stack to connect to bank accounts, and they were also limited in how much functionality they could get. And then now suddenly PSD2 comes along. The APIs are free. All you need is a license and a few developers to connect to bank APIs, or you can use a service like Nordigen to connect to like one endpoint, and you get all these banks in one place. So suddenly you get free access to banking data if your user gives you the consent, and also the ability to initiate payments on behalf of the user through their bank accounts. And those things are just game changers and that just is disruptive in so many levels. First of all, you can start a fintech startup with less resources than ever before. And you can start like a fintech startup that's like really good with tons of features that you couldn't afford to build previously. And then secondly, well, you can now start to disrupt traditional things like credit bureaus by building an actually better credit score through the data that you're able to acquire from bank accounts. Or you can build an alternative payment rail to the ones that we use by Visa and MasterCard. So the opportunities are like so many now. And then end users, this is just amazing. So as end users, we're used to this innovation, like we used to pay with cash, and now we have cards that you can beep on the counter. We're used to this kind of stuff. But then what we don't understand is that unless the infrastructure layer keeps evolving, we're not going to have too many new things coming up in the future. And now what we can rest assured knowing that there's exciting new technologies that will be built in the future due to the fact that we have this infrastructure available today. So we will probably see that making payments online is going to be significantly easier than it is before. We will not have to type in our card details in every single merchant that we go to. We'll have methods that are nicer and smoother and also secure. We'll have the ability to passport our creditworthiness. If you've built your sort of credit history in one country. Like today, it's if you move to another country, it's lost. But then with a better alternatives to credit bureaus, you're able to actually migrate your credit history around. So there's lots of magical things around for end users. So end of day, everyone is kind of better off, except for banks. But then, banks are banks. They've always been great at dealing with compliance complexities. The best banks always figure out how to do what they're supposed to do, and also continue benefiting from the ecosystem as well. And then there will be banks who might find this to be too expensive, but then frankly there's so many things that to run a bank is already pretty expensive. So PSD2 I don't think makes a huge impact, and if you're a bank, you're supposed to be compliant with all these things.
And talking about Nordigen, what benefit do you get when you provide your services for free? What is your business?
Yeah. So Nordigen has a freemium business model. The banking connectivity bit is completely free of charge. We do not charge for it. We will never ever charge for it. What we charge for are value-added services on top. So we, for example, we have developers who are, connecting to bank accounts. They have these data streams now directly from bank accounts of their end users. Open banking data is actually very unstructured. It's very hard to make sense of it. And so as a developer, for you to make sense of it, you have to be a software engineer and a data scientist at the same time, which rarely is a very rare combination. Less rare than 10 years ago, but still pretty rare. And so what we see is that a lot of developers are struggling with the data quality. A lot of developers are struggling to understand and make sense of open banking data, and we've built analytical tools to help them to do that. And so we have tools that do transaction cleansing. We can understand which transactions, what kind of merchants appear in which transactions, which is like very important if you're building a budgeting app or like an accounting solution. We can help you to enrich data so we can understand what are the the addresses of merchants inside of transactions, even if the bank does not provide them. We can help with transaction categorization. In some instances, we can help with income verification as well, based on transaction history of a person or a company. So there's like an area of things that we help with. The vision that we're trying to build with Nordigen is that, well, open banking is free in Europe, and is going to be free in all regulated environments. There will be lots of value-added services to provide to developers that are using these free connections, and Nordigen wants to be the one-stop shop for all those things. And so that's kind of the business model. So it's very transparent, and also kind of very much makes sense if you zoom out. It's very similar to how an open source solution might work, but this is it's not like really open source. It's similar, but it's not that.
I understand. And what challenges can appear in connecting to open banking APIs?
Yeah, it's interesting. So 2 years ago, there was no connectivity really. PSD2 went live. Banks were supposed to have APIs. Very few banks had APIs, and we have 6,000 banks in Europe. So that's kind of like it's a lot of banks to connect to. 2 years in, we have vast majority of the European banks have decent APIs, and many have amazing APIs. And to give you like an example of how good the APIs are, we actually integrated with more than 2,000 banks with a small team of developers in 11 months. So like 1/3 of all the European banks in 11 months with a small team of developers. And that's how good the APIs are. This is just a matter of commitments and integration and following good software development rules. But the state of the APIs is good. Now there's an asterisk. So like it's not great at all times. Sometimes the banks have built APIs that are like truly amazing, and sometimes they have built APIs that are less than ideal, and we still have to do a lot of education to help the banks to understand how does it work for us, and we still have to give them feedback, but it's getting better and better, like literally by the day. There's a lot of companies out there in the market that still claim that, oh, it's hard, don't even try to connect to bank APIs. But like, if you kind of listen to them, this is the first generation open banking companies. They want to make money off the connectivity they've built. They've spent tons of money to build these connections, and they really want to make a return on the investment. But in reality, if we did it in 11 months, we're actually quite sure that someone else can do it in 9 months, and then like someone else afterwards can do it in 6. And so connectivity is a total commodity. What is valuable is to kind of connect and build the infrastructure of this, but then the most valuable bit comes on top, which is what do you do with the open banking data, and that's where our kind of our key product offering really sits.
I totally understand you. And how did you build your product? I mean, did you have an internal team already, or did you outsource the developing?
Yeah, we've built everything internally. We're quite lucky to be based in a country that's pretty full of developers, and we don't have too many tech unicorns per capita just yet, which is great. Like we're based in Latvia, and we have the neighboring country Estonia nearby, and Estonians have Bolt and TransferWise and a few more companies that are like very, very, very big, and the competition for dev talent there is insane. And luckily here we have, in Latvia we have one tech unicorn, and that's it. So like the competition is much less fierce. So yeah, we were quite lucky that we started in our region, and we still have all of our dev team here. But then going forward, of course, it makes sense to be reasonable. So like going forward as we scale, sometimes it makes sense to kind of build an internal team. Sometimes it makes sense to work with external teams for certain projects. So going forward, we'll definitely try and be reasonable on this front.
So am I right that you consider the talent the talent market is more than just reach? It's even hardly competitive. It's hard for the professionals there to find the job even. Am I right?
When you look at the job market today, it is weird. There's tech companies who say it's the talent is scarce, and all the best people have been hired by big tech and the likes. But there's also what we also see is that like a lot of companies are very, I would say, unflexible in how they search for talent. Like now that we have COVID everywhere, and people love to stay flexible, and they love to stay safe, and like going to an office is becoming less of a requirement from person side, and more of a just something that you every now and then want to do. So it makes sense for companies to be flexible. And then if you're flexible and you realize that, well, you can have a remote workforce, then suddenly the world is your oyster, and it really doesn't matter where the team is based. And if you're building a fintech startup that has a legal address in London, well, you can hire people remotely. Then you can easily work with people from anywhere in the world. You can hire a great data scientist from San Francisco. You can hire an amazing developer from Indonesia, and you can hire a great product person from Ukraine, and suddenly like the only thing that you need to think about is like time zones and taxes, and those things can be solved. So that I think is fascinating, and this is where I think the big opportunity sits for tech companies that realize that, well, once you kind of go beyond needing to have everyone in the same place, like the world is your oyster.
Then why do you think companies outsource their core systems to the vendors? Why? And why not?
Yeah. So there is this theory, which I can't recall the name from, but like basically the theory goes that anything that is core to your business, you do in-house, and anything that is not core to your business, it makes sense to look for a third party to do it. And then depending on like what is core, what is not core, and those things can shift. That I think is probably what is on most of companies' minds. And so when we started out building a better alternative to credit bureau, we realized that many of the banks and lenders actually did not want to outsource a credit score to a third party, because that was core to their business. But what they were willing to outsource was things that were not core, which is lots of things around the data preparation. And this is what I also see in a lot of businesses, today. And when we're thinking about scaling, we're also thinking about, well, which parts of the business are completely critical. And so absolutely anything related to our financial connectivity ecosystem and the product development, that's critical and core to what we do, and it does not make any sense to outsource it. But there's some things that are less critical, and there's some for example some tools that you might use that are related to marketing, and you don't want to build everything internally. You're more than happy to use something that is someone else's built, and if you need some custom features to be built for a specific tool that you use, then it makes sense to hire someone else and not try and use your internal resources. So yeah, I think there's like benefits to each. What you have to recognize is just like what is critical, what is not critical, what is core and what is not core to your business, and then it makes sense to, for anything that's not core, it makes sense to find someone who can do it out there in the world, which frankly now there's so many great development agencies out there, and a lot of people should be looking into them.
We could even circle back a little bit to the heart of your to the heart reason of why you do what you do. These are customers, and let's talk about fostering trust with them. How do you see third parties fostering this trust with customers, encouraging them to share their highly sensitive data?
Yeah, absolutely. So the point of open banking is to give an option for people to do more with their bank accounts. In the days of closed banking, which was kind of like the opposite of what we have today, closed banking was all about you open up a bank account, you have a relationship with your bank. Whatever the bank allows you to do with your bank account, that's what you do. And whatever it doesn't allow you to do, you can't do anything. And then typically most bank accounts are pretty dumb. You could send in some money, you can transfer some money, and then when online banking came about, we could look at your own transactions and sort of like go through your transaction history. And then you're kind of like always at the mercy of the bank. If the bank decides to build some cool features, then it's great, you benefit as a customer. If it doesn't do anything, well, you're stuck with the bank. And then also, well, there's been some neo banks who popped up, but like, and they're exciting to use, and people use them a lot. And I myself, I also have like a bank account, but neo banks, they offer some cool features, but you're literally living two lives. You're not living like a one financial life. You have like two financial lives based in two different banks. And you always have to think about, well, what do I do with this? How do I solve this thing? Do I use one bank or the other? And what kind of implications does it have on my financial well-being? And that's just terrible. It's kind of like, operating on two different computers with two different operating systems. And that is like just hard to do. It's not like user friendly. What open banking allows is like open banking has literally built these roads between these banks. If you think of banks like, small cities and villages, open banking has built the roads between them. And if you want to travel from a bank to a bank, you no longer have to like take a catapult and jump from one bank to the other. There's like a nice road that's been built, and you can use this road to transfer information and make payments with a bank account as well. And so that is the core reason why open banking exists. What that allows us as well is, it gives an option to the end user to use this technology or use this infrastructure, but it does not demand the user to use it. And so let's say if I want to use a fintech application that says that it wants to connect to my bank account and maybe fetch my data and show it to me in a way that is exciting to me, I have the option either to connect my bank account or to not connect my bank accounts. And if I don't want to connect my bank account, the app is not going to get anything. I have not given my consent. In Europe, consent is everything. And the same applies to GDPR, the same applies to PSD2 and open banking. So the users' data is kind of sits in a closed banking environment either way. And then I can choose to kind of let the fintech access the data if I want to. And then going forward, what I think is well, what we see that open banking adoption is growing. We see that people are opting in to use this exciting technology. What we also see is that people hate the word open banking, and it is just so ambiguous. Open doesn't mean that anyone can look into my bank accounts. Well, no, absolutely not. But that's, all these questions come by because of like a weird choice of a term. We've seen some providers actually just call it like, hey, link my bank account, which is like, a much nicer thing, or pay by bank, which is again something that is it really answers the question of how it works, but doesn't go into the details of like, or doesn't create any abstractions on top. And so going forward, I think right now open banking is in early stages, and it's literally being used by fintech early adopters. And first of all, it's the fintechs who use it the most in Europe, and secondly, it's the fintech users, and both of those groups are pretty advanced in their understanding of technology. But I'm pretty sure that in the next 2 years' time, we'll see the adoption take off rapidly also in areas that are perhaps not so tech savvy. Like for example, like anytime you use a bank statement today, or like there's anything, anytime you have to do anything with a bank statement, you could replace that thing with open banking, and that would be the much more convenient and much more secure. And so we still use we still use bank statements when we apply for mortgages. We still use bank statements when we want to rent out an apartment in Europe. Some landlords do ask for a bank statement. Well, all those things can be replaced by open banking, and the experience would be much nicer, and the whole thing, frankly, would be much more secure and much more traceable. So I think open banking is in a sort of stage of maturity. It's definitely here to stay. We also realize that the business models that exist here are much more inclusive than anyone thought they would be. Even if the open banking adoption is not 80% in Europe as it is in US today, well, we can definitely see how it's going to get there, and how Europe is totally going to meet the same KPI as Europe has as US has already.
But the operational and technical challenges are like massive. They require massive investments in time, people, infrastructure, communication processes, like bugs resolving, inside the system. Do you have some piece of advice of how to decrease budget expenditure?
Do you mean as a fintech who's trying to use open banking? Well, like the best way to cut your expenses is to use a provider that's free. That helps a lot. And also you mentioned that the expenses are huge. Well, there's as with every new technology, there is a period in time where there's information asymmetry. Some parties know more about it than others. But as the technology matures, information becomes a commodity, and then the technology itself becomes a commodity. What we are experiencing now is that, well, technology is becoming better and better every day, and there's more and more developers in Europe who actually know how to connect to bank APIs. So I'm 100% sure that whatever costs exist for connectivity today, they will be rapidly decreasing, probably like, I don't know, 100% year on year, or like 50% year on year, and until they hit the points where they're like super tiny, and that just goes to show how connectivity is an absolute commodity. So one thing that a fintech can do just to save costs is look for ways to plug into systems that have been built, or look for people who've done it before, and to try and work with them, and then just look for ways how to not blow up the costs. It is so easy to be slow with connectivity. It's so easy to make one bank connection per week, and then you end up with like 50 bank connections in a year's time. But the alternative is to find ways how to be fast and lean, and not overinvest in areas where you don't need to, but focus on what is core. And that, I think, is what is critical, and that is something that I suggest any fintech should take a look at. And frankly, this is the best fintechs operate this way. I mean, if you look at the largest neobanks, the pace at which they're innovating is crazy intense, and they can only do that because they've found ways to not create bloaty projects with too many project managers and some sprints that are kind of take forever to kind of do anything. So if you take those things away and you kind of just operationally lean, then you can, like, loads of things are become less expensive, including open banking. And it's, I mean, and like look at us, like we integrated with 2,000 banks in 11 months. Clearly, this is not that crazy expensive to do. And the most, and that is great because you don't want the infrastructure to be expensive. You actually want to invest in the application itself. So once you plug into the infrastructure, you have now more budget to build an application and reach more users.
And talking from the customer's perspective, there are no compliance requirements from a customer's perspective, but they do need to permit the data to be shared with a bank or the application, and the basic account information, which are regularly shared payments, incoming different types of transactions, account benefits. What steps should be taken for the customers, like protection? Because I think that banks and even third-party providers must educate consumers on how the open banking can actually improve their living and their financial control.
Yeah, absolutely. So
yeah.
So what we see is that the infrastructure side and the regulatory side has made it so easy for consumers. We have regulation. And that means that all of the entities that do connectivity, they have to be regulated. And that means there's lots of control mechanisms. We have the regulators keeping an eye on all of this ecosystem. We have the banks keeping an eye because they also have their own risk control mechanisms. So the space is regulated. We're in a setting that is quite secure. That being said, the people should not take this for granted. People should be critically minded about the applications they use and about the features they use within those applications until the point where they feel confident. There will come a point for open banking where connecting your bank account to something is going to feel as natural as using Google to sign into like an application online, or as you'll feel as confident in this technology as perhaps beeping your card on a counter somewhere. And it also took a while for this technology to take off. So it didn't happen overnight. These features were rolled out to a small group of people, and then they tried it out, and then when they feel comfortable, only the next group of people were exposed to this technology. And open banking is definitely going to follow the same trend, but what is also great is that, like, we have this framework in which all of this ecosystem is built. It's regulated, and the APIs are built by banks, which is again takes a lot of potential risks away. So yeah, the end consumers are kind of in a good position to start with, but of course you got to stay critical, and you always got to stay critical, especially with financial services. Use only solutions that you trust and apps that you trust, and also be critical about what kind of things they are asking you to do. If you trust them, then you can rest assured, like worst case scenario, your app will be able to, the company that is building the app will be there to support you. And then there's like this whole ecosystem out there with the regulators and the banks. But like staying critical is absolutely necessary at all times.
And I think that payment revenues and data can come along with it to the tech giants. What future do you see here with such a perspective?
Yeah, tech giants are weird. They're all over the place. We've recently seen that Amazon has been playing around with buy now, pay later as a new kind of fintech movement. And there was always rumored that, maybe Amazon is going to become the SME bank or the bank for merchants. So they, that would be like a hell of a bank. You've seen that Apple has been playing around with their buy now, pay later features, as well as the Apple cards and Google has been doing all sorts of weird stuff. They had the Google Pay that also uses open banking in US. They have solutions that they launch for lending companies. Like what is also good is that on the flip side of it, we have regulators that are keeping a good eye on the big tech companies. The big tech companies, what they have brought to us is amazing internet experiences. Those are cutting edge experiences. And the only reason why big tech is actually big is because, well, they've made so many tools for developers to make internet like actually frictionless. So they have that advantage and they have that experience and they know how to create these amazing experiences. But then, big tech is kind of known for leveraging their power, and regulators are keeping an eye on them. And I think as long as regulators are critically looking at the things that the big tech is building, I think we're going to see lots of innovation go from this, but also they will. I don't think they will be abusive, and even if they are, one of the better things that open banking has taught is that in case there's in case someone just grows too big, such as the banking sector, well, you can enforce an API infrastructure on top of them to challenge them. And I think there's been some people talking about this idea that maybe instead of trying to separate the big tech companies and maybe maybe not to kind of like limit their M&A activities, what instead you could be doing is enforce a free API on top of Google and Facebook and Amazon and Apple, so that people could migrate from their services with less friction. And well, that would be an interesting thing. And that definitely the day that comes true, will probably be among the first ones to create a free API that connects to Google, Facebook, and Amazon.
When you say weird things, I'm wondering, why are they weird for you? Oh, you told that like Google or Amazon are doing weird things.
Yeah. Well, personally, I'm not entirely bought into the idea of the metaverse like that would probably is the weirdest thing recently that we've seen. Also, what I see recently, another trend that's happening is how BNPL is being adopted inside of web browsers, which is it is weird, as in like this is different because this is a application that used to exist inside of a browser that's now kind of like being added to your desktop, really. Yeah. And so this is again like another direction which is weird, as in like we've never seen this before happen. And it might, and if it works, well, like what does it mean for the future of tech? What does it mean for the future of browsers? What does it mean for the future of shopping experiences? So when I say weird, I don't necessarily mean it in a bad way, but yeah, if you have to ask what I think about metaverse, I would probably say that like that's weird, and I'm not entirely bought into the idea.
And I understand why. You think it will reshape the whole reality, like in a few years even. Am I right?
Yeah, I mean, if Facebook is right, and they probably have their arguments, then well, that changes completely everything that we do. And we've always had this as humans. We've always loved stories. We've always loved these universes. And what some part of what Facebook is trying to do is trying to bring this curiosity about these universes into the everyday lives of the people. And we've had games for ages, and we've been very excited to play games. But then, yeah, like it's just so different to everything else we've experienced that it's very hard to wrap our heads around. So, for some reason, it might be shocking for people, and for other reason, it might be exciting. Yeah, but going forward, hard to say how it's going to evolve. Yeah, I haven't bought a VR set myself. Maybe it's time. So maybe that's when I'll change my thoughts around this.
So let's keep in touch.
Let's do it. Yeah.
Have a great day.
Yeah, and happy holidays.
And you too.